Thanks for joining us from the Ohio AgNet Voice You Know the News You Trust studio, sponsored by Grain Equipment Company, where innovation meets execution. I'm Dale Menyo. The past 2 weeks have brought about further escalation of record high January fed cattle prices. In the 5 area reporting regions, Nebraska, Iowa, Minnesota were once again the highest, with last week's averages just over $210 a hundredweight. These regions also reported the bulk of the negotiated fed cattle trade volume. Kansas feed yards sold just near 7,500 head last week in the negotiated market at $202 per hundredweight, with the Texas, Oklahoma, New Mexico region trading just 1,690 head at $201 per hundredweight. The supply of harvested cattle remained fairly tight as the weekly total slipped down to just under 600,000 head, 4,000 head decline from the week prior. The fed steer and heifer portion of weekly harvest head counts have been very near those of a year ago in the past 2 weeks, while cow throughput has been 12% smaller than a year ago. Live cattle and feeder cattle future prices have been forced higher as live cattle contracts have been lagging negotiated values until recent days. And that may make upcoming tomorrow's highly anticipated cattle inventory report to be released even more important. For this current cattle cycle, the market saw a peak in its cow herd inventory in 2018 when the cow herd totaled 31.8 million head. It wasn't until 2022 that mass liquidation became undeniable for the market, as much of the country struggled with severe drought and nearly unattainable profitability from the grassroots level. Last January, the cattle inventory report showed the beef cow herd at its all-time record low of just 28.2 million head. However, with the shift of leverage in the marketplace over the last 2 years, allowing cow-calf producers the opportunity to capitalize on all-time record high prices, everyone's wondering, is there any chance the U.S. beef cow herd has seen some growth? Today's market analysis is brought to you by the Louis Dreyfus Company, excited to be building the newest state-of-the-art soybean crush facility in Upper Sandusky, Ohio. Want information on marketing your soybeans to LDC? Call them at 574-566-2113. With our market analysis, here's Ryan Martin.
Grain markets finishing sharply higher on Thursday. Now we kind of have that hope and a prayer marketing to see if these numbers can hold in the days ahead. March corn poked to a new rally high. We traded above $5 on corn in the May and July contracts easily. And so this is going to be the story. What is the next technical resistance level? Soybeans bumping up against resistance at around 1076 in the March. U.S. farmers are releasing a wave of cash selling, cutting their old and new crop ownership. We're looking at overall a willingness of fund managers to chase the Board of Trade ahead of a weekend that could have President Trump applying tariffs on Mexico, Canada, and maybe even China. Mexico has 7 million metric tons of open U.S. corn purchases. It's difficult to understand if the U.S. tariffs would cause an origin shift, since most of the U.S. corn arrives in Mexico by rail. So those are the stories that I'm keeping an eye on here as we move through your Thursday. Do I think it affects the markets largely today? Probably not. I'm Ryan Martin.
And thanks, Ryan. Today's market's brought to you by Seed Consultants, simply better performance. December corn giving back a penny and a half at $4.65 and a quarter cent. November beans giving back a half a cent at $10.63. July wheat down a penny at $5.87. February cattle down $1.52 at $207.02. February lean hogs unchanged at $83.90. This is the Ohio AgNet.